Overall, understanding these market dynamics will empower buyers to make informed decisions, ensuring they can take full advantage of the favorable conditions currently present in the automotive landscape. This change is primarily driven by a combination of rising inventory levels and fluctuating pricing trends, which have begun to alter the balance of power in the marketplace. As dealerships replenish their stocks and the supply chain stabilizes, consumers can expect a wider selection of vehicles available for purchase. This increase in inventory is significant as it allows buyers to explore various options without the pressure of limited choices. Additionally, pricing trends are shifting. Many buyers are witnessing a decrease in vehicle prices compared to the inflated rates seen in previous years. This trend is particularly relevant as it opens the door for more competitive pricing, making it an opportune time for consumers to negotiate better deals. As we delve deeper into the current car market, it's essential to consider both new and used car segments. The new car market is adapting to these changes, with manufacturers responding to consumer demand and adjusting production accordingly. Meanwhile, the used car market is also experiencing its own transformations, with a growing inventory that provides buyers with ample opportunities to find quality vehicles at reasonable prices. Don't forget to like, share, and subscribe to our channel. Your support is needed to keep insightful and money-saving content coming to the general public. As we navigate through 2025, the car market is characterized by a significant shift in buyer leverage, primarily due to high inventory levels of both new and used vehicles. Dealerships are now stocked with a diverse range of options, allowing consumers to explore various makes and models without the urgency that previously defined the market. This abundance of inventory has been a welcome change, especially after the disruptions caused by the pandemic and supply chain issues. However, the ongoing chip shortage continues to cast a shadow over production capabilities, affecting the availability of certain new models and leading to sporadic pricing fluctuations. While some manufacturers have managed to adapt, the lingering effects of the chip shortage mean that not all vehicles are equally accessible, which can create pockets of scarcity even amidst overall high inventory levels. This scenario has given rise to what is commonly referred to as a buyer's market, where consumers hold more power in negotiations. With ample choices at their disposal, buyers can leverage this situation to secure better deals whether they are looking for new or used cars. The implications of a buyer's market are profound. Consumers can expect more competitive pricing, enhanced incentives from dealerships, and a greater willingness to negotiate. As buyers become more informed and empowered, they can navigate the market with confidence, ultimately leading to more favorable purchasing experiences in this evolving automotive landscape. In analyzing the demand side of the car market, it becomes evident that consumer behavior is significantly influenced by the rising average transaction prices, which now exceed $50,000 for many new vehicles. This steep price point has led to a noticeable shift in buyer preferences, as many consumers are increasingly hesitant to invest in new cars that come with hefty price tags. As a result, there is a growing trend of buyers gravitating towards pre-owned vehicles, which offer a more budget-friendly alternative without sacrificing quality or features. The appeal of used cars is further amplified by the fact that they often come with lower insurance costs and reduced depreciation, making them an attractive option for cost-conscious consumers. Additionally, consumer sentiment towards expensive new vehicles is shifting. Many buyers express concerns about the value proposition of investing in a new car when prices are so high. This sentiment is compounded by economic uncertainties and rising interest rates, which make financing new vehicles less appealing. As buyers weigh their options, they are increasingly prioritizing affordability and practicality over the allure of brand new models. This shift in consumer behavior not only reflects a more cautious approach to spending, but also indicates a broader trend towards valuing long-term financial stability. Consequently, dealerships and manufacturers must adapt to these changing preferences by enhancing their offerings in the pre-owned market and reconsidering pricing strategies for new vehicles to better align with consumer expectations and demands. As consumers navigate this evolving landscape, understanding these dynamics will be crucial for making informed purchasing decisions. For instance, popular models like the 2026 Ram 1500 Laramie showcase a manufacturer's suggested retail price, MSRP, that often exceeds $60,000, while dealer invoice costs typically hover around $57,000. This pricing structure highlights the significant markup that dealerships can impose, especially when demand outstrips supply. However, the dynamics of supply and demand have shifted recently, leading to a notable discrepancy in the availability of new vehicles. While inventory levels have increased, many consumers remain cautious due to the lingering effects of previous supply chain disruptions. This has resulted in a situation where certain models are still in high demand, while others languish on lots, creating a varied landscape of availability. The implications of high inventory levels on pricing strategies are profound. With more vehicles available, dealerships are compelled to adopt more competitive pricing tactics to attract buyers. This can lead to discounts, promotional offers, and incentives aimed at moving inventory off the lot. Ultimately, both parties benefit from a clear understanding of the market dynamics, as it fosters a more transparent and equitable negotiation process, allowing consumers to secure favorable terms while enabling dealers to maintain healthy profit margins. Historically, profit per vehicle sold has varied, but during the pandemic, many dealers experienced inflated margins due to supply shortages and heightened demand. As inventory levels stabilize and the market begins to normalize, profit margins are also returning to more typical levels, which can impact how dealers approach pricing and sales strategies. The ongoing supply and demand imbalances continue to play a crucial role in shaping dealer profits. In scenarios where inventory is high and demand is moderate, dealers may find themselves compelled to lower prices to attract buyers, which can squeeze profit margins. Conversely, in cases where certain models remain in high demand, dealers can maintain higher prices, thus enhancing their profitability. Understanding these market conditions is essential for both dealers and consumers, particularly during negotiations. Buyers who are aware of the current inventory levels and pricing trends can leverage this knowledge to negotiate better deals, while dealers must adapt their strategies to remain competitive. As the market evolves, the ability to read these trends will be vital for maximizing profits and ensuring customer satisfaction. Overall, understanding these trends is crucial for both buyers and sellers as they navigate the evolving landscape of the used car market. As dealerships and private sellers have replenished their stocks, inventory levels of used cars have seen a notable increase. This surge in availability has had a significant impact on pricing, leading to more competitive rates for consumers. Unlike the inflated prices witnessed during the pandemic, when supply chain disruptions and high demand drove values to unprecedented heights, the market is now stabilizing. Many used car values have begun to decline from their peak, making it a more favorable time for buyers seeking quality vehicles at reasonable prices. This shift is particularly important as consumers increasingly turn to the used car market, drawn by affordability and the opportunity to find well-maintained vehicles. Moreover, the market conditions for used cars differ markedly from those of new vehicles. While new car inventories are still recovering from production challenges, the used car market has adapted more swiftly, offering a wider selection for buyers. This disparity means that while new car prices remain relatively high due to ongoing supply constraints, used car prices are more accessible, allowing buyers to capitalize on the current inventory surplus. Ultimately, being proactive during this period can lead to significant financial benefits and a satisfying car buying experience, making it an ideal time to make a purchase. One of the primary reasons to consider purchasing during this time is the urgency that dealers face to meet their sales goals before year-end. Many dealerships operate on annual quotas, and as the calendar year draws to a close, they become increasingly motivated to clear out inventory. This urgency often translates into more aggressive sales tactics, as dealers seek to boost their numbers and achieve bonuses or incentives tied to sales performance. As a result, consumers can expect to find a greater potential for better deals and discounts during this period. Dealerships may offer significant markdowns, special financing options, or promotional incentives to entice buyers. These offers can lead to substantial savings, making it an opportune time to negotiate favorable terms. Additionally, with the current market conditions favoring buyers, the combination of high inventory levels and competitive pricing can enhance the overall purchasing experience. For those considering a vehicle purchase, now is the time to take advantage of these favorable circumstances. Thank you for joining us, and we look forward to seeing you in our next discussion. With high inventory levels and competitive pricing, buyers now have more leverage than ever when negotiating deals, whether they are looking at new or used vehicles. This favorable environment allows consumers to take advantage of better pricing, increased selection, and the opportunity to secure great deals, especially as dealerships strive to meet year-end sales goals. As we wrap up this discussion, we encourage you to engage with our content. If you found this information helpful, please subscribe to our channel, like this video, and share it with friends or family who might also benefit from these insights. Your support helps us continue to provide valuable information and updates on the automotive market. Additionally, we invite you to explore our related content and services, which delve deeper into car buying tips, market trends, and financing options. Whether you're a first-time buyer or looking to upgrade your vehicle, we have resources tailored to meet your needs. Stay informed and empowered as you navigate the car market, and don't hesitate to reach out with any questions or topics you'd like us to cover in future videos.